So we're live. Okay. Hi, and welcome to our weekly, monthly rather, uh, talk where we host and invite various different uh, variety of interviewers to come in. And this month we have a very special trio. That the third person is missing, but I think he'll join in about 5 minutes. But we have Neil Borate, who's the deputy editor and head of personal finance at Mint. He's a law and economics graduate, and I think the last couple of years that I've been reading his articles, and I think he's just taken those to another level. So more strength to you, Neil, and
Thank you so much,
looking
Anish.
forward
Lovely
to
being
more
here.
stuff, more power to you. And my good friend Aparajita Sharma, who I know for almost a couple of years now, and I think I started. I think we connected on some. I think it was
Index
index
fund.
funds or some index funds or something of
Index
that
fund,
sort of
sorry.
stuff. And since then, she's also edited my book. And then, as we were talking about that, she said, "Okay, I'm also writing a book." And I said, "With whom?" And she said, "I'm writing it with Neil." I said, "My God, then it's such a small world." So awesome, and
Small
congratulations,
world.
guys. I
Thank
believe
you.
the book is doing extremely well and
Thank you.
close to reaching bestseller status. So all the best for that.
Thank you.
So
After Prabhas, definitely.
definitely. I've been. I have a author signed copy. So with all three authors. So I treasure that. But so you guys have written in record time for a book of this covering a personality this widely covered. So when and so when you guys started conceptualizing this, and how did you guys come together, like how did the three of you come together to say that, okay, let's do this book and take it to the world?
I sometimes joke to myself. I open my phone contact list, and the first two names with A, I just pick those.
That's how I get
but
some calls.
but no, on a more serious note, so our book is divided into three parts. The first part is biographical. The second part is three companies that made Rakesh's fortune and three mistakes that he made. So they are company analysis essentially. And the third part is the personal finance lessons that you can draw from him, what to learn, what not to learn. So Aprajita has been in the stock market for much longer than I have been. She's been tracking it. She's been talking to lots of people. She knows the brokers. She knows all the big players that have been around for a long, long time. So she was the perfect choice for part one and part three. And that those two parts we did together, she and I. And then part two, Aditya, because it's all stock analysis and he's brilliant at that. He takes apart IPOs whenever they come, and he's become really famous in that activity. So Aditya was a natural choice for that.
Right. So how difficult or how easy was it when when you started doing research for the book? Because while there are a number of things that are out in the public domain, I'm sure it was a challenge to say that, okay, what do we put in the book that somebody, let's say, I mean, the initial readers are going to be the people who are from the investing world or from connected to markets or know Rakesh. So what are we going to add, or how are we going to add bring something new to the table? How do
Yeah,
you guys
yes,
go
exactly.
about thinking
You've
about
you've
that?
you've put your finger on it. So there was a dual problem. I mean, on the one hand, there's so much out there. There's so many interviews. Although interestingly enough, in the internet, if you go back more than 5, 6, 7 years, it becomes harder and harder to find videos and articles. So the
Right.
net, I mean, we think it's this boundless trove of information that is there forever, but things disappear. I mean, if you search for your own interviews like more than 6 years ago, you'd probably have a hard time finding them. But anyway, that aside, you're right. So the big challenge was digesting the sheer amount of material that's out there on him, all of his talks in various places. And on the other hand, getting the family to talk because the family had just suffered a tragedy. They were not in a state of mind to talk to us. So we ended up talking to people that he worked with, stockbrokers that knew him mostly off record, although some key people did come on record. So we had Shankar Sharma on record. We had Ramesh Damani on record. Um, so we added some of that and we compiled a lot of the stuff that he had said, but it was all scattered, all bits and pieces all over the place. We wanted to give the reader like a one-stop shop. This is where, if you want to know about Rakesh, just read this.
Right.
Right.
Appraisal,
Yeah, and
anything
we
to add
wanted
to
to,
that?
yeah, and we wanted to have everything in one place and something that first time investors and students can read because Rakesh Jhunjhunwala is no more. So his interviews are not going to telecast on TV channels anymore. So
Right.
they must know about Rakesh Jhunjhunwala. So we wanted to dedicate this book to them instead of people who already knew him. But obviously, even those people will find value in this book because we did manage to put out some hidden aspects about him, some hidden stories which are not out there in public. So yeah, it has everything for all.
Yeah. No, it was. I mean, I was reading about the Titan chapter. So how the brand Tanishq came to be named Tanishq, and it was a combination of Tata and a word from Sanskrit called
Yeah.
ornaments. So there is a number of trivia and interesting stuff even for people like us who've seen him from the outside or who've seen him for his interviews or tracked him for a very long time. So I think there's something for everybody. But if you were to put in your own words, what is the significance or impact of the person or persona called Rakesh Jhunjhunwala on the Indian stock market for the last 20 to 25 years, since he started becoming more known? Uh, what do you think he means to the Indian stock market, investors, or even the uh, the DIY investor, the retail investor who used to follow every word of what he used to say?
Yeah, so rags to
Yeah.
riches story because he embodies the sentiment that any person or someone maybe who may not have the background to get into stock market, even those people can get into it and become so rich just by having those analytical skills, just by understanding equity market companies and all those things. If you put in your efforts, if you make it your passion, then you can make it big in stock market. So that is the sentiment I believe retail investors like about him.
Right. What do you think he means to the Indian stock market, or has meant over? Because post liberalization, he's perhaps one of the first. In the 90s, we had a I mean, the best known person from the 90s is Harshit Mehta, but with a sketchy background. He's perhaps the first investor to emerge from India who's there on the Forbes billionaire list, and if you tell people, not even 10 years ago, when I left my job in Morgan Stanley and started investing full time, and if people asked me, what do you do? And I said, I am an investor. They said, no, no, but what do you really do? So it was like how people say you play cricket or you act or something. And when then people ask you in India, but no, but
हाँ,
what do you really do? They वो तो सब करते हैं. Invest तो सब करते हैं. Actually, क्या काम क्या करते हो? But he's the guy who really legitimized, investing as a
stock
full
market
time.
as a
I
profession.
think, yeah, I think we have Aditya also.
Hi
With
guys, good afternoon.
hi Aditya,
Hello.
welcome.
Hi, hi.
So
Thank
Anish,
you
let
for
me answer a
having us, Anish.
question.
Yeah,
I think every story needs a hero. मतलब हमारे पास villain था of the early
हाँ,
90s.
yeah,
But just like Hollywood has its Brad Pitts, we needed and Warren Buffett's in America for the financial system. We needed our own, and clearly he was that. He wasn't always that. In the 90s, he was bearish. He came close to losing a lot of his money at some points. And I don't think he was that well known in the 90s. Like the legend of him got built up over time.
yeah,
And I'm really glad that it's a happy story. It's a good story. It's not all of the famous financial stories are always ones about scams and corruption and things break down. That seems to be like the one thing that stands the test of time. But this is probably the one exception where a positive story stands the test of time.
right. Yeah, and how difficult is it to research on an investor in India? Because in the US, you do get a lot of regulatory filings. You do get a lot of background on. Even Warren Buffett, while he's got an exception from the SEC that he can file after 90 days instead of 45 days, and things like that, because he's that large. But most investors do have to file within 45 days. So you can go back in time and really build their track record. You can really go. Whereas in perhaps in India, that's a bit of a challenge. Uh, so how and even today, a lot of Rakesh's trading, how much money did he really make of trading is not known. How did he trade? What did he trade? He's famous for saying that he's not never been able to make money trading commodities. He said whenever I thought I get bullish on oil or I get bullish on some metals or something of that stuff things, and I try to trade it directly, I've always lost money. But it's really tough to sort of get information on somebody's trading track record in India even today. So, besides this, what were some of the challenges that you think you would face in this case, because you've done the book on Rakesh, but even otherwise, if you were to sort of do a book on other famous investors in India, what do you think of that?
I was just thinking if Rakesh were alive today and he were posting those screenshots on Twitter, even if they were
Yeah,
true, nobody would believe him. There were so many
yeah,
fake screenshots that even if he had that, he might not be believed. You're right. I mean, there is no way of knowing what he was stating in the 90s. We have to piece it together from his interviews, from stuff people have written about him at that time. Now, of course, I mean, if you're a investor in any company with more than 1% stake, then your name appears in the shareholders register, and there are all these platforms that aggregate this stuff. So I would say over the past decade or so, his portfolio, at least mota mota, has been public through those filings, through those registers. But obviously, it has holes. Like if it's less than 1% in some company, if it's privately held, then if he doesn't say it, there's just no way of knowing.
yeah. So, for example, like I said, how much did he leverage? How leveraged was he? For example, he said during COVID he lost about 400, 500 crores while he was selling stuff. But he said, I just used to, I just had to sell it. Because it was unknown. And he said 2 months later, I was comfortable again that it's flu, not
Yeah.
cancer, and we're
Just
going to
in
get
couple
past
of
it.
days.
Yeah, yeah. So Aditya, welcome. We'll just add you into the conversation. So welcome to the conversation. So
Thank you.
what was your experience? What did you learn new about Rakesh that you did not know? Maybe perhaps because Aprajita and Neil are journalists looking outside from outside onto the market. You are inside as a practitioner, as an investor. So you may have tracked him from that angle. So what is it that did you learn that changed perhaps you're thinking about investing, or you learned something, or you said that okay, this is something I can do or should not do from after writing this book?
Sure. So, a lot of questions. I'll tackle them one by one.
Yeah.
So, number one, I think the experience was really great because I believe that. So I'm a voracious reader. So just to get that opportunity to write your own book, it's I think my life's biggest milestone. Of course, researching about RJ, trying to gather information about him. It was a bit challenging because. Uh, some of his companies didn't really have a lot of say primary or secondary information out in the market. So what really happened was, then your equity research skills really kicked in. You went to the very first annual report of the company, you went to the con calls of the company, you try to refer the very few con calls or interviews that RJ had given, and then you just try to do investigative work, right? You just create a mind map and try to map those events to his actions. And so the thing is, when I started investing, I was told that I should study about RJ, and that is how I came across him. I was told to study about him. I was told to study about his bets, Titan, Lupin, Crystal, and the sorts, and just to learn from it. So of course, I had always known that RJ had taken a very big bet. He had taken a contrarian bet. So basically, when he started investing in Titan was when the European operations had been dragging down their profits. it had eaten a lot into the net profit, and everybody was negative about Titan, and that is when RJ had got into Titan. But of course, there are a lot of things that you really learn about him when you dig deeper. So number one is that, of course, RJ did not really buy the stock. The initial buy wasn't really on the premise that he saw the conviction or he saw the long runway ahead. It was a very simple reason. A broker of his had called him up and said that he just has a big block of Titan at a discount, and that is how he got into the stock. And one more new thing that I learned was, so RJ was kind of a risk taker. He was a big risk taker, right? I mean, even before he did his due diligence, he got into Titan. Even before he did his own due diligence, he got into DHFL. So I always tell these two examples because one worked out spectacularly well for him and one did not work out for him. दोनों केसेस में ऐसा था कि he bought the first tranche, then he met the management and he loaded up. So RJ really bet on just two things. He bet on the kind of runway ahead, and he bet on the promoter. Even in the case of Titan, he met Bhaskar Bhatt, and whatever he said, he took it at face value. In the case of DHFL, he met Mr. Wadhwan on a flight, and he was extremely impressed by his vision. And then again, he took a bet on Mr. Wadhwan and DHFL. And of course, there are a lot of other things like he had taken leverage. Even during the great financial crisis, when the stock of Titan has had more than halved, he held on to his conviction. And one more really surprising thing that Neil and I had found out was that RJ was never that kind of a perma bull as we saw him, right, for the past few decades. It was only after say 2003 2004 that his stance started changing from a moderate stance to a very bullish stance. In fact, in a 2002 Capital Ideas online conference, he was quite negative about the government. He was quite vocal about it. He was saying that what the government is doing is wrong. They are focusing on petty communal matters. They should focus on the stock markets and the likes of it. So, of course, as I delved deeper, I learned a lot about RJ, and of course, the learnings were even more better, right? And the examples were even more better. So yeah, definitely, all a very great experience.
If I remember correctly, Aditya, I think it was Morgan Stanley that sold Titan to Rakesh, right?
So the thing was, Morgan Stanley was also selling, and I think Morgan Stanley का ही block का जो broker था वो डाकी
Uh,
था.
uh.
Right.
So Anish, if you had
Yeah.
stuck with your old firm, you guys would be sitting on a 20,000
Correct.
crore fortune.
Yeah.
Exactly. So yeah, even that was new information to me. I think it's usually believed that he bought Titan in 2003-4, but I believe what I learned was that he had a small stake in Titan even long before that, from the
Yeah,
90s, which he carried
yeah,
forward.
yeah.
So the next question for each one of you, perhaps what is that one story or one anecdote or any one piece of information that stands out for you, which sort of defines or embodies him as a or his mindset as an investor or a trader? Like what was that one? Just like you say, one एक वाक्य like this tells you कि हाँ this is like this guy. This defines the guy. So, what is that one anecdote or story, if you have, about RJ, that maybe
Defines.
perhaps going back in time or even now, or yeah,
Yeah.
start
So
with
yeah,
you.
I'll go. Yeah. So as we know that Harshad Mehta and Rakesh Jhunjhunwala both belong to different camps, Bull and Bear camp in early 90s. And while I was interviewing, I was told that people closer to Harshad Mehta, if you're speaking to those people, then no, sorry, people closer to Rakesh Jhunjhunwala, if you are speaking to them, then don't mention Harshad Mehta at all, because they take offense, and it's like a rivalry to another extent, and extending for so many decades now. So that was a kind of situation. And when one journalist told me that in 90s, Harshad Mehta told this journalist that he admires Rakesh Jhunjhunwala. And in stock market, everybody starts as a trader. At least in 90s, people started as a trader, and later on, when they accumulated wealth, then they become investor. Then they start investing their money. But that trading mindset, they still have that trading mindset. And when they start investing, they lose money. They go bankrupt, and it happened in a lot of cases. But Rakesh Jhunjhunwala was one person who could do both. So even Harshad Mehta, both being rival, and he admired him. So this is this story really touched me. That investing and trading, he excelled at both, and he
Right.
kept on doing it throughout his career, throughout his life.
Correct. Yeah, it's very rare to come across somebody like that.
Mhm.
Neil, anything from your end?
Yeah. So my favorite sub story about him is because I'm a macro guy at heart, and I love the big events and the big consequences that follow from them. So my favorite story is the Madhu Dandavate budget, where everybody was bearish. Madhu Dandavate was a socialist. VP Singh government before the reforms, and for whatever reason, Rakesh took a big contrarian bet and succeeded and made his first big killing. That's my favorite story.
Yeah, I believe he went home and told his wife that
Yeah, you can
we can
buy.
afford an AC now. We can buy an
Yeah.
AC now, and that's
Right.
we were right.
Hmm.
Yeah.
And he bought it for everyone at home. So he lived
Yeah,
with the family, so parents, brother, he bought for everybody.
correct. Aditya, what about you? What's that one story that you think remains
So
with you?
I'll tell two stories. One is
Yeah,
related to Titan. So like I said, it was a broker called Dake that called him up for a big block of Titan, which he was giving him at a discount of 5-7%. So RJ immediately called a friend of his, and he's like, a broker is offering me this much block of Titan at this price. So his friend is like, don't buy the block at all. Morgan Stanley will come to your home and give it to you at a very cheaper price. But then RJ thought to himself that भाड़ में गया वो, whatever his friend's name was. He actually said that भाड़ में गया उसका his friend, and he ended up buying the block. So this story really told you that while RJ may have relied on his network, but he always listened to his own thoughts or his own heart. So he was the one who was driving his own car. He was the one who was in control, and he never let go of that. And number two was, of course, he was quite himself. He did not really care of optics and all of that stuff. In fact, a very recent interview of his a couple of years back, he was on live TV talking to someone at CNBC TV 18, and
yeah.
in the middle of the interview, his broker called him and he's like, "Ha, kalpesh bej de." And then he started he continued the interview like nothing had happened. So I love to tell these two stories because he listened to himself and he was himself. He never cared for optics and all of that. He was very unfiltered basically. And
Right.
you talk to any of the old brokers, any of the old people who had attended analyst meets and all of that, you would come to know the kind of language he used, the kind of person he was. So yeah, I mean, uh, that's the two stories. Yeah.
That's going to
Yeah,
be
and
Aditya in 10 years. He's going to get a call and he's going to be like, yeah, Kalpesh Beshte.
yeah, he's going to get a call any
I'll
moment now.
I'll be like, "हाँ, Neil बेच दे."
Sub crypto
Yeah,
based
I,
though.
I would love to do that seriously.
Yeah, I think he loved being that. I mean, he was what he was. I don't think he
Yeah.
tried to project anything or be something that he was not, or whether it was in
Hmm.
interviews or every time they would. I mean, all the interviewers tried hard, tried to get him to pin down onto a stock or pin on what are you buying. And there's a favorite question of journalists. I mean, no offense to you, Neil and Naprasita, but they always. I mean, I more for the TV journalists. Like,
Hmm.
and that's what their viewers want to know. What is Rakesh buying? And
Huh.
just switching a little bit from here is, I remember this because I even I've seen some of my friends or some of my relatives and see
Hmm.
through that, and people want to copy successful
Hmm.
investors. They really want to follow them, but they want to buy Suzlon they want to buy a Go First, or they want to buy a Kingfisher airline, but they don't see that. Look, that is allocation. You are not you, and every time somebody used to ask him what is the next Titan or what is the next Crystal, and he would say Titan is the next Titan.
Huh.
And I own one third of
Yeah.
my portfolio is Titan. But so people never look at that asset allocation or portfolio sizing, position sizing, and they will go and buy Suzlon the moment they hear Rakesh has bought Suzlon. Okay, let's go and buy Suzlon. So so I think he was also quite mindful of that, and he used to be very hesitant. But that's why of sharing names perhaps. So from covering now retail investors, DIY investors, and dealing with maybe they're dealing with investors, what do you think of this psyche of not just Indian investors? I think it's everywhere that you want to maybe copy an investor, or you want to
सस्ते में
ride
चाहिए.
on the
Just
coattails of another investor, but you are not copying his position sizing. You're not copying his conviction.
Yeah. See, Anish, the way
I
I
mean,
see it is like
you
this,
can borrow the name of the stock, but you can't borrow.
Yeah.
scary.
So I
Yeah, go
think
on, Aditya.
it comes from the fact that so I'm just drawing an analogy, right? So I always try to relate fitness with finance. So when day one of a gym, you would go to your trainer and ask which exercise would make me the fittest the fastest. The same way when you come to the markets, you would ask कि कौन सा stock है जो मुझे सबसे ज़्यादा अमीर बनाएगा सबसे fast. So then what people
Yeah,
tend to do is that they try to look at successful people. They would tend to look at the biggest guy in the gym and try to copy him. As simple as that. They just extrapolate that, okay, this guy is extremely fit, he's doing this, so if I also do this, I'll be fit. Okay, this guy is very rich, he has this many shares, this much position sizing. So they ignore the position sizing, but they look at the stocks and they'll be like, okay, even I can do that. Let me copy that. But what these people tend to forget is the kind of homework these guys have done, the amount of time they have put, the kind of position sizing they have, the kind of risk management they have in place. So Neil always says in our interviews that we have written a chapter in our book saying what not to learn from RJ, right? So
yeah,
uh,
yeah,
so obviously we always say that you should not clone anyone, because we may know the moment they buy into the stock, but we may not know the moment they exit the stock, right?
correct.
So it's your money, it's your time that you have put in to earn that money. So retail investors should invest some time, or agar if they do not have that time to do that do it yourself investing, then they can always rely on an advisor, or a mutual fund or an index fund, best. Because if you don't have that time, then you can't do justice to that investing part.
Yeah, but
You
somehow
know,
when
I
it comes to investing, I think everybody thinks if you have a trading account and a demat account, you are like with a bat and ball you can't become Virat Kohli, but if you have a trading and demat
Right.
account, you can become RJ. Somehow that
So,
mentality,
so
it
the
looks
thing
very
is,
simple.
markets, yeah, the market cycle also play a very big role here, because if you really looked at the pandemic recovery, right, that V-shaped recovery that came in,
Yeah,
a lot of people thought that making money was extremely easy, and that stock markets are only going to go up. But of course, a lot of people, a lot of new investors learned it the hard way that there are concepts like mean reversion, and etc. etc. So the cycle also plays a very big role here. A lot of first-time investors came into the market. We saw that big jump in demat accounts, and most of these demat account holders thought that making money was extremely easy. You just buy it and it just goes up. I mean, the kind of content that I've seen during that time was just out of the world. I mean,
yeah,
I saw some videos from the US where this couple come on air, and they're like, making $10,000 or $50,000 a week is so easy. We just click on a stock, and when it goes up, we sell. I mean, it makes
yeah.
zero sense.
Investing stock market.
I mean, what kind of analysis is that?
Yeah.
So of
Sorry,
course,
Neil, you were
yeah.
saying something. You were adding on something to that.
no, no, I was just going to remark. I haven't been to the gym in 3 months. I got reminded of that by
Yeah, but you have an excuse, right? You have a fracture, so
Yes.
Huh.
You can
So I
be.
Yeah,
think
very.
Neil is taking over my role. I'm the one usually who's cracking jokes.
No, my gym involves going to the kitchen and back.
So
And
you
this
now. Yeah, yeah. Go on,
this
Afra.
analogy, yeah, this fitness analogy, this is really great. So even in fitness, you diversify. You have to do
Yeah,
strength training,
Yeah,
you have to do cardio, and you have to focus on your diet. So you have to focus on each and every aspect to become fit. So similarly, in investment, you need to have that discipline. And I believe retail investors, they are driven by greed and they are lazy. So they rely on other people's wisdom. They don't do their
yeah.
homework. And very simple logic, they don't understand that low valuations don't mean low prices. So penny stocks and all these Yes Bank and stocks which are falling. So investing in those stocks, what does it mean? Because they feel it's cheaper. Cheap valuations and cheap prices are two very different things, and it's the simple logic they don't understand. And as I mentioned, that lazy, they don't want to do their homework. They will ask others where to invest, and I see it every time. Even people call me, my friends, sometimes they ask me in which stocks are you investing. Then I tell them, I myself tell them that even I don't get that much time to go into company analysis. So yeah, I do
Correct.
have individual stock portfolio, but major part of my portfolio is driven by mutual funds, because that is easier and I can focus on my other job. Why, if
Correct.
I have those mutual fund experts to rely on, then obviously I'll take that route. And when I have time to go into company analysis, then I will buy that stock. But I'm not going to buy into something. I don't even listen to my husband. He only has stock portfolio. He doesn't invest in mutual funds at all. But even if he's suggesting me a stock, I don't invest in that. I have to do
I
my
don't
own
think he's
analysis
very,
and
very
give an idea.
happy listening to this.
Yeah, is he going to be watching this?
No, no, he's not watching it, but I will tell him.
So, again, there's an interesting aspect that comes out that, how much is the market inefficiency, or like in the 90s, for example, it used to take 3 days. They used to paste the profit and loss and balance sheet of a company on the exchange outside. It used to take 3 days for the information to travel from Bombay to Calcutta. Of course, the large Calcutta brokers would get it beforehand, but for the retail investor or somebody else, it gradually used to trickle down. Today, you, me, anybody else, everybody gets that information within 30 seconds of that
Yeah.
being posted on, and things like that. So in terms of information edge, that's perhaps gone away. So how difficult or how easy do you think, or what do you think is going to be the edge for the next RJ or the next large investor to emerge from India in the, because a large number of investors also, I believe the mutual fund idea or in that sense the marketing has worked, even though number of demat accounts opened, I think they've also gone down in terms of number of activity.
Yeah.
People are investing through mutual funds. Large number of money is lot of money is coming through there. So, like Michael Morbis said, who's on the other side of the trade. So, if today Aditya is on one side of the trade and equally smart, somebody else is on the other side of the trade, who are they going to? The inefficiency that way perhaps has come down. So, what is it going to take for the next RJ to emerge from India, or from today's market scenario? Neil, if you want to take a stab at that.
So my short answer would be कि trading छोड़ दो influencer बनो. That will give you an edge. But
That's your current plugging your current story.
okay, my story, yes. No, the longer answer is that, of course, analysis, of course, patience, and I mean, some of that Rakesh himself practiced long-term investing, enormous amount of patience. I mean, he got into Titan way before 2002. He got into it in the 90s, held on for a decade of stock going nowhere. That timeless quality continues today. Um, so I think, and there are India has some great research analysts, some great PMS managers, including somebody in the room, who are positioned to really make it big. I think clearly, like you say, the information edge is gone.
And it has to
Aditya, you
be
want? Yeah,
stock
yeah. What?
analysis. Yeah, it because information arbitrage is gone, and retail
Yeah.
investors, even they don't have to buy those Bloomberg and Reuters databases. It's
Yeah.
easily available screener. So these
Correct.
databases, access to data has become quite simple. So
Yeah.
anyone, just by spending a couple of thousands, they have access to everything. So it boils down to fundamental analysis and fundamental analysis rules. So it's all
Yeah,
about
but a
how
retail
well.
investor perhaps is now not even if they have that information, how are they going to
Hmm.
use that information and like Neil said, the discipline or the conviction perhaps
Yeah,
to
so to become RJ, one has to do it. So only those people
yeah.
can become.
So they all
And
want to be
RJ,
in trade, do
and
option trading.
another
Yeah,
aspect
yeah,
is not these days. There could be other RJs also, but they may not be public persona. They may not want to be known. So there are a lot of good people who are doing great work, and they may have those qualities. But since, like, unlike RJ, they are not public, so we don't
yeah.
know about them.
Yeah, if they go public, then heavy advertising code will hit them, so they will not go
Huh.
public.
So, Aditya, what do you think is going to be the edge in investing over the next decade from here on for somebody like an RJ to emerge or a DIY full time investor, guy starting off uh,
Sure.
today?
So, I mean, just to set the context, the time period in which RJ started out, right? Mr. Ramdev Agarwal had an interview where he just spoke about the kind of information available in that era. So,
Yeah.
when Motilal also started, they wanted to research on these equity companies, right? It was so difficult to get their annual reports that Mr. Ramdev Agarwal actually built an annual report library just near the BSc building. Now the challenge today is completely opposite of that. There is so much information in the market that the real challenge is not to find the information. The real challenge is to actually find the actionable information or information that actually makes sense or adds value to your original thesis, or builds on contributes to your original thesis. Now, having said that, Anish, I have met a few investors who have had 600, 700, 800 baggers. But of course, these are investors that wouldn't really make the limelight because they don't have a 13,000 or a 14,000 crore position like RJ did. So if you want to become a future RJ, or if you want to beat RJ, number one would be, of course, the position size. Number two would be, of course, the conviction and the patience that you exercise with these stocks. And needless to say, it's going to be a extremely uphill task because what RJ achieved, or what he could do, the series of events that led to him being RJ. I mean, I think they are one in a billion or one in a trillion.
Yeah.
So I mean, yeah. But if someone were to do it, yeah, the foremost point would be position sizing. Yeah.
Anish, food for thought. The next RJ might not be human, could be AI.
Oh
Yeah,
yeah.
that was
Why
actually
not?
you preempted one of my questions. It was going to come towards the end, and but let's take it now. That we are seeing now in the last. So I started off as a fundamental investor. Last 10 years, I've sort of transitioned to the darker side in terms of quant investing, and the same question that people ask me sometimes, that if everybody knows what is momentum, what is value, the way you guys define it, or what is quality, is known, how are you going to make money? And I try to explain to this that, look, just because you know it doesn't mean you're going to do it, because like Aditya gave the example of fitness, and and or even diet. We know what to avoid, we know what not to avoid, what to eat, but we don't follow it. I think that the next 10 years the edge is going to be behavioral. The edge is going to be not informational. It's going to be more behavioral and process that will drive the next 10 years. But what do you think is going to be the impact of generational AI, or in maybe not just in investing, but even or not in terms of becoming the next RG or something, but for even for retail investors, do you think all these platforms now, mutual fund platforms or investing platforms, will change? For example, I was seeing this, uh, this. Plugin from company called Portfolio Pilot in the US, where now you're not going on there and putting up uploading your cash statement or whatever. You can just copy paste your portfolio and say that please analyze my portfolio for me, and the whole thing comes down in terms of efficient frontier, and this is what you need to sell, this is what you need to buy, and all that kind of stuff. But are people really going to follow that advice or not? I think that is the bigger question. So, Neil, what do you observe, or Aditya, what do you guys observe when you all talk to investors or to client, maybe we can start with Neil and then go from Rajat and
Sure. Though I'm actually a little surprised that it hasn't yet emerged. I would have thought investing would be the first place to apply AI. I mean, long before um, chat and large language models. I mean, because this is so lucrative. If you figure out investing, you don't need to do so many other things. But the
yeah.
fact that it hasn't means that it is a tougher nut to crack than some of the other tasks where AI has really broken through. Um, so the AI revolution, might not be straightforward. Might not go the way we think it would go. Where somebody figures out an algo which is super smart and corners all kinds of trades. Um it could happen in very unexpected ways where you know uh, we end up outsourcing part of our tasks to an AI. So that's what I would say.
You think we could
Yeah,
train a model to be like RJ? Appraise that you want to take.
no.
There's a thought.
No, that yeah, that is what I was coming to. That I don't think that AI maybe will. So in finance field, you have to have that human knowledge, that human wisdom
Yeah,
will have a role to play. So investment decisions and fund management, everything, AI cannot replace fund managers. AI can assist them, but it will not replace them. So in data mining, etc., and creating those strategies, and as you also create strategies, so it will help
yeah.
out, but eventually that human role has to be there. So I don't think AI is ever going to replace fund managers or the
Anish
kind of
is
thing.
testing his next product on us. He's doing a soft launch next RJ AI.
No, I
Right.
sometimes when investors, somebody asked me, that okay, if you've sort of automated a lot of your process and strategies, what do you go to office and do? I said I just go and switch on the computer because the human still has to go and switch it on, right? You have to tell. I'm
That's
just
part
jokingly, but
also. Wisdom.
yeah, right,
No,
and then sit
relevant.
there and do nothing. Yeah. So Aditya,
Okay,
what are
I
you
have a
seeing from
question
your
for
vantage
you.
point?
I
Yeah,
have a first. I
yeah.
have a question for you, Annie. So you
Okay,
automate
okay.
all these strategies, and if something
Yeah,
goes wrong, maybe
yeah,
tech fault, tech glitch, something
yeah,
goes wrong,
yeah.
then whose fault will it be? The software provider's fault or fund manager's fault? Who's who will be at fault?
So,
I'm
so
looking at it
luckily,
from investors' angle and complaints.
yeah,
Uh-huh. So who should be
yeah.
held
So luckily,
responsible?
we don't do high frequency trading or we don't do anything of that sort. Our processes are very very low frequency. Like the lowest, uh,
Hmm.
I mean, the fastest that we do is rebalance a week, if at all,
Hmm.
and others are like rebalancing every month or something of that sort. So for us, it is a lot of the analysis is done. The computer spits out a lot of the stuff that this is the portfolio for
Hmm.
this rebalance. This is what you need to buy, what you need to sell. We do little
Hmm.
bit of human checking on top of that, and then do
Hmm.
that. But your question is valid. That we've seen in
Hmm.
the US, there is a company called Knight Capital, which in
Hmm.
2013-14, some upgrade, something was getting updated in the software. They were a high frequency trading firm, and within 10 minutes they lost some $400 million. And because HFT is again leverage, there's a lot of leverage. So if some bug went wrong and they had to be they shut down. So it's and so obviously, yeah, it was. I mean, the liability ultimately will come down to you as the investor.
Hmm.
That their investors lost money, they lost money, and the firm was bought out
Hmm.
for its some bit of its technology. So, and I
Right.
think in India also we very few firms do HFT. I think, and if
Huh.
there's a flash crash or something of that sort, like happened in the US in 2010, where the Dow suddenly fell 1,000 points and recovered. They put speed breakers again now for that. In after that, there are circuit breakers, there are things like that. But again, it's like solving for the past crisis. I mean, risk is something unknown. What is going to happen in the future, like COVID or something like that. That is risk. What nobody can see,
Hmm.
and that the only way that you can protect yourself from that risk is to take risks that you can bear. That even if your equity was to go to zero, you still, I mean,
Huh.
survival is what will keep you in the game. That you need to come back the next day and
Huh.
be back in the game. But again, turning. I know the journalist in April came out, so putting you back. Aditya, what do you think is going to be the role of there's like there's a floodgate of information and there's a floodgate of
Yeah.
technology. There's a floodgate of and I have called this out a number of times that mutual funds are index huggers. They are closet indexers. And I was when 5 years ago I said this, a lot of people got angry. But today we've seen in large cap, there is no alpha. There is very little alpha, and I think that will go. That will sort of trickle down in the mid cap and the small cap space. Also, and again, India is very shallow in that sense. The markets are some of the large caps have got like so much liquidity, and then as we go beyond 200, suddenly the liquidity just dries up. So our market is unique in that sense, but still uh, we still are very sophisticated in terms of we are the largest options traders, volume
Yeah.
generators in the world. So it's a very unique market. So how do you see the next 5-10 years evolving in terms of use of technology, impacting long-term investing as well, and this short-termism kind of.
So there's a story that I like recalling, right? So it was the 1962 Cuban Missile Crisis, right? Soviet
Yeah.
Union and the US were at a standoff. Nuclear war was imminent. All the trading firms, all the investment firms were liquidating their positions. But in the midst of all this, right, there was a trading firm whose trading head went to the trading floor and commanded all his traders to punch the buy orders. So, one of the junior traders just told him, ki, are you stupid? The world is going to end. So he's
Yeah.
like, if the world is going to end, all of these positions
It
are going
doesn't
to
matter.
make no sense anyways.
Yeah.
But if the world does not end, you're going to make a killing that you could never imagine in your wildest dreams. So why I tell this story is because human intervention is always necessary.
Important.
Now, if you are a HFT trader, or if you are a scalper, or if you are an arbitrager, then of course technology is made for you. You can use all the algos, you can use all the programming languages to find spreads or arbitrages in a pair of securities or any financial instrument for that matter of fact. But when it comes to long-term investing, I believe that it's an extremely qualitative field. uh, I don't dispute the fact that despite it being a qualitative field, we do use a lot of quant data. So, for example, I know in the US that a lot of hedge funds, take images of the Walmart parking lots to just forecast कि इनका ये quarter अच्छा होने वाला है या बुरा होने वाला है.
Yeah.
I also know of a derivatives trading firm which tries to read the governor's lips and take a position कि ये rate बढ़ाने वाला है या cut करने वाला है.
Yeah.
But coming back to investing, I believe that the number of data points are going to increase. I think it will just add to the noise. Now, for example, पहले अगर हमें एक्सपोर्ट डेटा 6 महीने में पता चलता था, तो भी हर महीने पता चलता है. हमें कंटेनर डेटा पता चल जाता है इंडिया का हर महीने, हर 2-3 हफ्ते में कितना ऊपर गया, कितना नीचे गया. सो आई बिलीव इट एड्स अ लॉट ऑफ अननेसेसरी नॉइज टू द इन्वेस्टिंग फील्ड, बट अ लॉट ऑफ पीपल डू ट्रैक इट. मतलब ये कंपनी का कितना शिपमेंट गया, हाउ मेनी शिप्स हैव गॉन आउट ऑफ इंडिया रिगार्डिंग फार्मा एक्सपोर्ट्स, सैटेलाइट इमेजेस ऑफ द मुंद्रा पोर्ट टू जस्ट फाइंड आउट कि कितनी मारुति की गाड़ियां एक्सपोर्ट हो रही है या बजाज के 3 व्हीलर्स एक्सपोर्ट हो रहे हैं. So big data or AI is going to help us process all of that. It is going to help us make a sense of that. But when it comes to the qualitative part, I don't think AI is ever going to help us do that. Because I'm pretty sure even if you had Chat GPT and all of the other AI plugin tools in 2020 April 23rd, when there was a lower circuit on the market, I'm pretty sure that AI would have told you to sell, because the trend was like that.
Correct.
It takes a lot of qualitative factors to think that कि चलो अगर दुनिया खत्म होने वाली है तो चलो ये पैसा कुछ फायदा है नहीं वैसे भी, बट अगर दुनिया खत्म नहीं होने वाली है तो लेट मी जस्ट डबल डाउन और ट्रिपल
Yeah.
डाउन एंड बाय. So my sense is that yes, data, a lot of big data is going to come in the markets. A lot of tools are going to help us make sense of that. But at the same time, I believe that the role of qualitative analysis is going to get more and more bigger. So I think the biggest example of that is Warren Buffett. मतलब right from day one he has been doing qualitative analysis. आप उसको आज भी जाके पूछोगे तो what's your secret sauce, he'll just say that I read 500-600 pages every day.
Yeah.
So he was asked this question in the Berkshire Hathaway AGM this year, right? And he said that as long as there are stupid people in the world, you can continue making money.
Ah, right.
So
Whereas
in
Kali
fact,
Munger was more, yeah,
Yeah.
Carl Icahn जो है, his Twitter bio for
Huh.
the longest time read that
Yeah.
a lot of people try to make money on complex things. I try to make money on human stupidity.
Yeah. Like a lot of people believe about a lot of people try to make money on artificial intelligence. I make money from natural stupidity.
Yeah, correct. Yeah, correct. He
Yeah.
changed it from human stupidity to natural stupidity, by the way.
Natural stupidity, yeah. See, the
Yeah.
artificial and natural. So that was the play of words that he was trying to go for. Yeah, and even if what I think, what is the guarantee that even if you had a system or even if you had a process that told
Yeah,
you to buy in April 2020, what is the guarantee you would follow it? I think that is where the weakness
exactly.
also lies.
Yeah.
That people do not follow their own systems and processes. That in those
Correct.
times.
yeah, very true.
So
Human
we'll
intervention is always
mindful
there.
of
Yeah.
time. Yeah, it's not going to go away. I think Jim Simons has intervened in his systems of Jim Simons, the medallion, has intervened twice in his life. One was at .com and one was during 2008. And the scientists were
Interesting.
very angry, saying that, look, don't do it. We will make a lot of money, and they were right. But he said, look, I have seen LTCM. I have seen LTCM. If one thing that I have learned from LTCM is that I don't know what is going to happen, and I know when it is a very very dire situation. So we need to cut back. We'll make little less money, but we will survive, and we will sort of go
Yeah.
on and make that kind of. So you can't be a complete purist in that sense. That I am. This is what my system says, and this is what I'm just going to do. You have to have that 5-10% kind of room for um, ad hoc situations or those situations which will call for your analysis or your intervention. Getting to the last 8-10 minutes of the interview, what is I know you must have been asked this question many times, but what is it that you want your readers to take away from this book? That this is my one message, that if you are the average investor in India, this perhaps should have been conveyed to you if you were reading the book. This is what, as a writer, I wanted to tell you. What is it that you wanted to want people to take away
So let me go first. And in fact, we put this in the book where we say what you should follow and what you should not follow.
from?
So
Yeah.
in terms of what you should follow, I would say two things, and they're not easy. They sound easy. So Rakesh's optimism, right, his crazy optimism about India, which didn't begin on day one, but it began
Yeah.
sometime 2002, 2003, when he went and bought Titan, when he wrote an article in Economic Times setting out the case for India. And even that was premature. Like Shankar Sharma told me that even that initial part for him was difficult because the market had yet to turn positive and bullish, whereas he had turned bullish. So that positivity, which stuck from then on for a good 2 decades, is probably the one big takeaway. This phase in India, and it's not easy. We're always bombarded with negative stuff. I mean, Rakesh would have seen 2008, 2013, policy paralysis, stagnation, and still stuck through it. Um, and I mean, I think of my own example. I'm very pessimistic, and like whenever I hear something bad, like I can't go more than 50% in stocks. It's just too much. So no, really. I mean, it's just psychologically, it's just very difficult because I absorb all the negative stuff around me, and I'm like,
Yeah.
no, no. It has helped me as well. Like I'm a gold bull, so I have 15% of my portfolio in ETFs,
You
and
need an
uh,
RIA. You need a good
yeah.
RIA too.
Second story plugin.
So
Good one, good one.
yeah. So I would say optimism and like we discussed before, staying for the long term, the incredibly long term. Again, easier said than done.
Correct. All right,
Yeah,
Aparna, what about you?
yeah.
What's the one message you want investors to take away from your book?
So I tell everyone that focus on risks. So whenever you are investing in a product, you must understand risks involved. What may go wrong? You have to think about worst case scenario. If you are comfortable with that, then go about and invest in that, be it individual company or any other investment product. So you have to understand the concept. don't rely on others because they are saying that this will fetch you 10-15% returns, or this was exactly the case with crypto, that you will double your money, triple your money, and people were seeing other people
ऐसा मत
making
बोलो यार, then
that.
फिर influencers will be out of a job कि किसी की मत सुनो. Then
नहीं,
what
but
will the Phil
वही
influencers?
but such I mean, it's about money, and money is important in life, and
Yeah,
we it's hard earned money. Everybody is working hard to earn money, so
yeah.
you have to have your own ability to put it somewhere. Why rely on others? So
But
that is what Rakesh
it's
Jhunjhunwala
being
used to
human.
say.
I think people
Mhm.
research more about a car or a phone
And
than
not about
buying Suzlon.
investments.
Like 10 lakh ka
Hmm.
Suzlon le lo, and they will
हाँ,
just buy it like that. Whereas we'll not buy a 10
हाँ,
lakh rupee something else, or
exactly.
5 lakh rupee item just on a whim
Hmm.
or a fancy. And somehow that gambling instinct of people just comes out when they, especially
When they
when
are
they
in
hear
stock market.
when they see a famous investor's name associated with a stock.
Hmm.
But that happens. Yeah,
Yeah, so
Aditya,
having
to
that
you, what?
conviction.
Yeah, conviction for.
So I think there are multiple messages that we wanted to convey through the book, and I'll take a few points from Neil and Aparajita as well. The first and the foremost point was that investing is very simple. When you actually look down, when you actually drill down into the investments that Mr. RJ made, they were quite simple. It's not as if he opened a complex chart and he looked at the Bollinger Bands, or he did some stochastic calculations to find out the fair value of a stock. Right? No, it was very simple. That is, that's the reason why consciously we kept the book extremely simple. The kind of feedback that we have received, in fact, the number of people who are not even related to the stock market remotely are the ones who have picked up our book the most. So I think point number one is, of course, to just simplify the legend of Rakesh Jhunjhunwala. Number two was, of course, just to put his story in front of India, because it's very criminal that till now India hasn't really produced any books or any content pieces on the famous investors of India. Scam 1992 changed that. I agree. In fact, that really helped, because the stock markets became a mainstream topic in households, right?
Right.
Number three was, of course, just to give a roadmap to people who really want to get motivated by a story. We of course want more investor participation in the markets, and we tend to believe that a lot of market bystanders get scared, that they think that markets are a very extremely competitive field, or it's a field where you require a rocket science degree. But honestly, it's nothing like that. All it requires is basic arithmetic and common sense. So just summing it up, we really wanted to bring his story in front of the common say public or common retail investors. We really wanted to motivate them that here was a man who started with 5,000 rupees and ended up with close to 40,000 crore rupees, right? If he can do it, you can also do it. We're not saying that आपको भी 40,000 crore मिलेगा, but you'll at least reach somewhere. Following the same roadmap and trying to avoid the mistakes that he did. You will be on the right path. So take getting out your story and just giving a roadmap to the common bystanders is our goal, and of course in a very simplified way. So yeah.
Yeah. That way India has been a very real estate and gold heavy kind of market, and I think, again, even when I meet investors or talk to people today, I say that FIs are coming in, putting in money. They have more conviction than you people, and they are making money of us. This is like a second colonization. They are coming and making money of
Right,
our
right.
companies and making money of our
And
hard work. I mean, and yeah, you should have one home. You should have some amount of gold, or some amount of that. But after that, once you de-risk yourself to that extent, if you really want to be, uh, you know, self-sufficient. Even today, I give my father that example that he bought a house in the 90s. That house is up 10x, but an index fund from the 90s is up about 3x. It's not. It's sorry, 30x rather, not 3x,
30x, not
30x.
3x.
Yeah, your equity is up 30x from the 90s. So that's the power of that compounding over the years, that sometimes that we lose perspective of in this short termism. Uh, Neil, do you know we've and even Aditya, you're a voracious reader. So I for one learned a lot from this series of books called the Market Wizards books series of books by Jack Schwager. Do you think there is potential for something of that sort to him? He's written four books. It started with the Market Wizards, then came the new Market Wizards, then came the Stock Market Wizards, then came the Hedge Fund Market Wizards, and now he's come out with his fifth book. I think the Unknown Market Wizards. That's of course over a period of 30 years. But I think it'd be wonderful if people like would come out with stories of small traders, small time traders who are full time or investors. I think, like I said, how we started our interview with that, if people would come out with their records and maintain records or maintain their, you know, uh, investing records, trading journals, things like that. Even if initially it is a lot of stuff is anecdotal, because a lot of it was not just looking at the trading records, but how they thought, what did they
Yeah.
one thing I learned was risk management. Where as an investor, sometimes one of the things that we do is tend to average when the stock goes down, but that was perhaps something that even RJ did not do that, unless very rare situations. Very rare situations. I don't think he ever averaged down, but that is a typical thing that a person does. So you think that over the next 5, 10, 20 years, there will be some a series of books on perhaps, and like you said, yeah, some of these investors are not very do
No.
not want to come in the limelight. Someone like Rajiv Khanna or Vijay Kedia or Anil Goyal, these large investors who also made a significant amount of wealth, created a significant amount of wealth over the last 20 years.
Anish, I'm going to
So,
be contrary. Sorry, Abhijit, I'll just quickly
no,
finish.
no, no, you have.
So I'm going to be contrary and say no. I don't think there will be. And I'm saying this because for a book to sell, the subject must be reasonably well known, as in the subject must have a draw. If I were to go out and write a book about some unknown person, no matter how much money he's made, it will not sell, not easily anyway. So the chances are low for that kind of book to come out. There will be other books on today's famous or even somewhat famous investors, and I have we've already started work on
Yeah.
India's greatest value investor, but he's also quite well known. So I don't think an unknown person's book can easily come out. Sorry, brother, go ahead.
Yeah, so even I was thinking about it, and it has been in my mind to write about hidden heroes of Dalal Street or any such title. So, but here I'll mention that Economic Times used to do this series called Dawns of Dalal Street, and
Yeah.
they would come out with one investor, and in detail they will write about the person, how they have made money. So I think such approach will work better, not a book, but having a series of articles, that will work better. And there are indeed people out there, and those
Yeah.
stories are really great. So yeah,
And
not a book
I think,
maybe.
yeah, I think I think one of the most important things again is the communication, even from the investor side, about their
Hmm.
thoughts. Like I believe Warren
It's
Buffett
hard
takes
finding
about
those
6 months
people.
to write his investor letter, and he takes
Huh.
that and it goes through multiple rounds of drafts and redrafts, and
Hmm.
multiple people look at that every data point and every line that goes into that newsletter. So I think uh, I hope that today we have a lot of fund managers writing those letters, perhaps
Huh.
too many, but
Yeah, too many.
but it's a good thing. I think I've learned a lot about reading from their because you understand their process, you understand how they are thinking at least, and you can
Huh.
glean a lot from there. And I think that's the only way perhaps to learn, other than to see that person, is to read and how they're communicating.
Yeah.
My last question to all three of you is okay. We lost Aditya. My
That's
last
okay.
question to you is there anything in the book that you left out to you which you think perhaps should have been there, or which you could not put because you could not corroborate it, or you could not, or it was too sensitive to be put in, but you can say it here.
Uh, I did. We did. I mean, I spoke about it at the event. So,
Okay.
so obviously we had to be really sure about what we are putting in, and
Yeah,
family was not on board with us. So obviously we needed to be cautious about everything that we are writing, every
that you
single
wanted to
word.
put it. Yeah, but what, for maybe making it concise and precise, maybe you left out certain things or you left out certain parts. Is there anything that you feel that perhaps ये भी आना चाहिए
So
था और ये थोड़ा
about yeah, about insider trading. So every person I spoke to while interviewing, while doing research on the book, so I did ask that question, that lot of people have that perception that राकेश झुनझुनवाला ने तो तभी पैसा बनाया क्योंकि उनके पास सारी इन्फॉर्मेशन रहती थी. So he would speak to promoters और उनके
yeah.
पास insider information है इसीलिए उन्होंने
Same thing
पैसा
is said
बनाया.
about Warren
ये
Buffett also, that he's an insider
हाँ
in US, and he's talking
हाँ.
to Obama at one end, and he's talking to Goldman Sachs at the other end.
Yeah, so I will share two examples. So one person I think वो जी सोनी और जी का
Yeah,
डील था
merger.
around
Yeah,
September. तो उसमें राकेश झुनझुनवाला, I think SEBI had sent them notices.
yeah,
Something of that sort had happened, insider trading related news. So I asked this question to one of people who went off record about it. So his company was associated with Sony or Z1 among them. So if if Rakesh Jhunjhunwala knew about this deal beforehand, and that person would also know. That is what he told me. That it's not at all possible. And he was close to Rakesh Jhunjhunwala, and he said even I was not aware of it, and I was one of investors, as in his company was one of investors.
okay,
If we were not aware of it, I'm sure Rakesh Jhunjhunwala could never be. So that is what he told me, that this notices and etc. This is all false. Rakesh Jhunjhunwala did not know about it. And
yeah,
another one of ex-employees I spoke to, he gave really interesting example that one of MNC company stock. So it had no movement for a long time. It stayed at one level for a really long time, and one fine day at 1 o'clock it suddenly goes up by a couple of points, so 300 level, and it goes past it. So he informs about it to Rakesh Jhunjhunwala what to do. So he asks him to take no action at that moment, and after 3 o'clock he suddenly calls him and says to buy certain positions of that stock, and the person buys it. And in the evening that company some news comes out related to that company, and the
right.
next day morning stock goes up and Rakesh Jhunjhunwala makes money. Now he says I'm not sure whether he knew about that news beforehand, or was it only because of technical reason that it had gone beyond 300. So I don't know about it. It's open to interpretation. And if he known had he known it beforehand, then he could have asked me to buy a large quantity. But going
Correct.
by his portfolio, those positions were not that large. So open to interpretation if we knew or did not know. So, but finally, insider trading, as you also mentioned, even if you know, even if everybody knows it, how many people can
Yeah,
actually leverage that information? So that is also there. So this amount
yeah.
of money that he made can never be only cause of insider trading. Skills
Yeah,
had to
and
play a role here.
yeah, even if you know that something about the
Hmm.
company, you do not know how the market is going to interpret that information tomorrow.
Exactly. So
What is
not
built into
everybody can
what is
leverage that
factored into the
information.
price.
Hmm.
It's very hard to like everybody knew a lot of railway thing is construction is going to happen, and suddenly we suddenly seen a lot of railway stocks suddenly just take off as if we're
Hmm.
going to build something. Uh,
Huh.
I mean, something new has happened. Something, but that's
Hmm.
how markets are. They're very, very lumpy. They move in like suddenly for two
Huh.
years nothing happened. Nothing happened, and weeks happen suddenly in a very
Huh.
short. Years happen in a very short time.
Hmm.
So that's how markets are. So I'll say anything that you want to add that you wanted to put in the book, but perhaps because of lack of space or something else that you didn't put in.
No, I put in what I wanted to put in, and of course, like Aparajita said, there are a lot of stories that unfortunately can't be a part of the book.
Yeah,
They'll stay with us, and we're extremely happy that we that book took us on a very different path. It helped us interact with a lot of different people from different walks of life who gave us a
Hmm.
very different perspective on the big bull. And yeah, I mean, that's about it. Yeah.
All right, guys. Thanks a lot, and wishing you all the best. I hope it hits the 1 lakh marks very soon. You know, maybe, but yeah, I think even though I like, I'm a voracious reader. I got to know a number of trivia, not and not just trivia, but it's nice to have it in one place. Before this, like Neil said, it's something that had to be documented. It had to be part of India's investing history. So I think all three of you, done a great job, wonderful job, and I hope more and more people get to read this book. And looking forward to more interesting stuff from you guys in the years ahead.
Thank you so much, Anish.
Thank
Thank
you so
you.
much for having us.
Thank you.
Thanks.